Yesterday's Liberation Day was a blitz. Trump just announced an additional 10% levy for over 100 countries, and some of them were hit really hard. China faces a cumulative of 54% tariff, the EU is 20%, and Japan is 24%. Markets obviously reacted the way I forecasted for over a week. Gold was going up, stocks were going down. And if you look at the US yield curve, you can see it's flattening. Therefore, we can expect a Fed rate cut very, very soon. When that happens, that's going to be the mark of another crisis or worsening economic conditions for the foreseeable future. And of course, yesterday we live traded the Trump speech and we made money because we stick to my analysis. You can see somewhere in the screen, my FX book is up about 7%. Yesterday just made little bit less than £8,000. If you don't want to miss out for the next opportunity, which is going to be NFP on Friday and of course CPI in a couple of weeks, then go to alphafx.eu and sign up for a lifetime membership for £199. First thing to do, check the account, see the P&L, how we're doing. Second one is macroeconomic top-down approach, third one fundamentals, fourth one technical analysis, and then fifth one execution. That this my FX book updates live. So this is a paid subscription for about $60, but I can see my statistics pretty much live or a few seconds delay. And yesterday you can see that the account was up 4.5%, which is extremely good, more than what I expected. And that accounts to about £7,900, setting a new all-time high on my account balance. If you want to get daily analysis and if you want to live trade with me like yesterday, the team during the Trump speech, go to alphafx.eu and take advantage of the 50% discount today. Moving on to the macroeconomics. Today I won't go into too much detail about macroeconomics because the effects are pretty obvious of the tariffs. The supply chain is going to suffer, growth is going to go down, inflation is going to go up. At least that's what the main economists are expecting and forecasting for the US. Not just the US, for the whole world. If you look at the yield curve, in this case the 3-year Treasury note and the 10-year bond, you can see that the yield curve started to flatten again and most likely it's going to invert pretty soon. As soon as the Fed starts cutting interest rate, because the yield curve is inverted, we are going to see the beginning of another recession which is going to last for at least 3 to 5 years according to my analysis. But let's move on to the fundamentals because we are day traders and we want to make money on a daily basis. And if you look at the economic calendar, you can see that the next economic data is going to be the ISM non-manufacturing. This is what you want to trade, not the services, not everything else, not the S&P. The ISM non-manufacturing PMI is what's important. Now you can see that the forecast is slightly below the previous data, and the next economic data release is going to be non-farm payrolls on Friday. Now it's important that Forex is offering a 50% deposit bonus, and why would you risk your money when you get someone else's? They add 50% to your equity. It's not your balance, it's your equity. You can trade with it. There's no catch. You simply deposit the money, you get 50% and you can trade with it. Simple as that. You can withdraw all the profits that you make, and then now starting the analysis with gold, you can see that NFP is not too far away. I'm going to add a vertical line somewhere here. This is going to be NFP. And also we have the ISM non-manufacturing, which is going to be somewhere around here. Let me just double check. Yes, ISM services PMI, which is the non-manufacturing PMI. So you want to make sure that you mark these on the chart and you see what's coming next. And you can see that gold is already back into this consolidation, which you observed carefully yesterday, and this is what made us over 250 pips profit yesterday. And you can see that gold returned because there's so much liquidity. Well, I'm not sure if it's going to be a bull flag anymore, but you can see the consolidation right here. And if you put the Fibonacci, and now we're moving down to the technical analysis, you can see that we have multiple confirmations. Yes, it does trade below the daily pivot, but if the world is going to be shaken by the market sentiment or the fears of the tariffs, then gold has absolutely every probability to reach $3,200. What I would do today is look at the ISM non-manufacturing or the ISM services PMI. What I'm expecting is price to wiggle around within this consolidation, but then it should break up and use the daily pivot as a strong support level and there's a clean direction all the way to 3,200. Remember that some of the investment banks forecasted an extreme of $4,500 for gold prices within 12 to 18 months. The chart, I think this is a good opportunity to enter. Now, this is not the financial advice, but what I'm going to do on my account is start another front running position. I still have a runner from yesterday, 0.10 lot, and what I'm going to do is add, let's say, 0.5 lot. Make it count. So what I just entered, and the stop loss is just above the, well, I can move the stop loss a little bit lower because this is not a big position. And I'm going to move this one as well. I don't want to get closed out because this is a runner. So the maximum risk I have is about £1,000, which is reasonable and within my means. The first profit target should be always and always the previous high, which in this case is going to be 3,163. That's about 400 pips profit. And then the ultimate target is going to be just under 3,200. I would maybe target 3,199. And there you go, just enter the live trade with you. This is a free signal. If you want the same level of analysis and if you want someone to guide you through the financial markets, go to alphafx.eu and take advantage of the 50% discount for £199. This is a one-off lifetime membership payment. Going back to the chart, let's see what else I should analyze. Let's do maybe NASDAQ. If you look at the chart, we traded this big ass candle and the position is still running in about, let's say, 582 pips. So this is what we traded yesterday. You can see I'm still in position. It's a runner position. But what I'm expecting on NASDAQ is price maybe to come back and retest this area. But now we can use technicalities and technical analysis for an entry. The first thing you always do is use macroeconomics and fundamentals and use technicals only for entry and exit. And of course, confirmation of the market sentiment and the macroeconomics. You can use technicals because technicals are good, nothing wrong with them, but alone, they're absolutely worthless. So my bias hasn't changed too much, maybe just a little bit lower. I would expect price to come back to retest, not the pivot, but maybe a little bit lower, and then continue down to 18,000 minimum. So you had the choice. Maybe enter now and use a wider stop loss or wait for price to come up a little bit higher. What I'm going to do is I'm going to set an alert, and if price comes up, I'm going to look at the market and send out a signal or analysis to my team into the VIP area. Remember, go to alphafx.eu and take advantage of the 50% discount today. Now, if you liked the video and the analysis, make sure you hit the like button, enable notifications, and leave a comment. Thank you so much. This is the AlphaFX.